The Bank of Canada increased interest rates by 4% in 2022, leading many people with variable rate mortgages to have increased payments of up to $1,400. And while those who chose fixed rates in early 2021 and 2022 are laughing their way all the way to the bank, those who chose variables are suffering. But the question is, what is the better choice in 2023? Is it variable or fixed rate? And in this video, I'm going to discuss all the reasons why you wouldn't want to take a fixed rate mortgage, including the fact that some economists are predicting a 98% chance of a recession, which is usually indicative of interest rates coming down. But before we get into all the details, my name is Nolan Mathias, and if you want to thrive financially, this is the place for you. So go ahead, click that subscribe button and hit that like button so more people like you can see this video. All right, so let's get into it. Let's discuss why you shouldn't take a 5-year fixed mortgage in 2023. And keep in mind, I'm discussing 5-year fixed rate mortgages here. I'm not discussing short-term 1- and 2-year fixed mortgages, which I think there is a valid reason to look at the moment. However, it's going to depend on what happens to interest rates throughout 2023 as to whether or not those are a valid strategy. And keep in mind that I also did a video on why you shouldn't choose a variable rate mortgage in 2023, which I will link at the end of this video. And if you're trying to make the decision between fixed and variable rates, I want you to watch both of these videos, as well as a future one on fixed versus variable rates where I will compare the two. Because what's important here is that you get both sides of the equation, the fixed rate side, the variable rate side, and you have a full comparison of fixed versus variable rates going into 2023 so that you can make an informed decision based on, most importantly, your risk tolerance. That is the primary piece of choosing between fixed and variable. It is your personal appetite for risk. So make sure that when you're trying to make these decisions, you aren't trying to make them based on trying to time the interest rate market, because that is a fool's errand. You don't want to be making the choice of variable versus fixed based on trying to save some money and timing the market, because that is very, very hard to do. You are either very much a variable rate type person or a fixed rate type person, and you need to determine which of those two things you are and make your decisions based on that. So without further ado, let's get into the 5 reasons why you shouldn't choose a fixed rate mortgage in 2023. So first and foremost, the first reason why you shouldn't choose a fixed rate mortgage in 2023 is that you think interest rates will start to go down. Now, obviously, I just said that you shouldn't be trying to choose your mortgage based on the direction of interest rates. However, if you are believing, and maybe it's later in the year, maybe it's later in 2023, that interest rates are going to go down and that there is going to be some near-term advantage to having a variable rate, then you probably shouldn't be choosing a fixed. Now, the second reason why you shouldn't be choosing a fixed rate mortgage in 2023 is you are willing to take the risk. So let's say you have a high risk tolerance and you can afford some fluctuations in interest rates. Well, if that's the case, and you know that statistically you're probably going to be better off in a variable rate than a fixed rate mortgage, well, then perhaps you shouldn't be looking at a fixed rate. If you've got that ability to withstand some interest rate hikes, then a fixed rate simply may not be right for you. If you are in the market for a mortgage, there's a whole bunch of details on mortgages that you need to understand. If you're in the market, there are a whole bunch of blind spots that typical consumers don't even know exist. In fact, there's a lot of landmines and surprises that can come up down the road if you choose the wrong mortgage. Now, if you're dealing with a company like mine, like Mortgage 360, we obviously make sure that most of those landmines and surprises are taken care of early on in the process so that they never are something that you find yourself having to face. However, as we learned from running this YouTube channel for the last few years, many people will try to do things by themselves and do things like pick variable rate mortgages with fixed payments that are going to end up costing them a significant amount of money down the road because they didn't know that the fixed payment option wasn't the best option for them. So we put together a course to help people who want to do it alone. And that course is priced so cheaply that anybody who's looking at getting into the market for a mortgage can absolutely afford it. And they would be crazy not to take it and make sure that they knew all of the things that they didn't know about actually getting a mortgage. So we've called that course Secrets to Getting the Lowest Interest Rate, and it is designed to make you a more effective borrower, to have better information and make sure that you don't make any mistakes. You can get that course by going to ratesecrets.ca. And if you decide you want to throw in the towel and have Mortgage 360 actually help you with your mortgage, we put a special offer in there to make sure you get at least 10 times your money back if you end up choosing Mortgage 360 for your mortgage. Now, the third reason why you shouldn't choose a fixed rate mortgage in 2023 is if you are trying to avoid a big payout penalty. Because here is one of the big advantages of variable rate mortgages. They tend to have lower penalties. They tend to have 3-month interest penalties. And if interest rates start to go down and you've chosen a fixed rate mortgage, you are likely going to have to pay a very significant penalty. And if you've chosen a mortgage with a big bank, this could be even greater. In fact, some big bank penalties, actually most big bank penalties are 3 to 5 times higher than what they would be at a monoline lender or a lender that specializes in mortgages only. This is a lender like First National or MCAP. But what's important here to know is that if you think that you might need to pay out your mortgage in the next 5 years and you don't want to have to give a whole bunch of equity back to your bank, you want to avoid fixed rate mortgages. Having a fixed rate mortgage and having to pay out your mortgage is one of the single fastest ways to give a whole bunch of your equity to the bank and be left with very little for yourself. In fact, leading into 2023, one of the big reasons why we suggested that people choose variable rates wasn't because we were trying to get them to time the market, but because we didn't want them to have exposure to high penalties. Because unlike rising interest rates, high penalties are definitely one of those things that people don't see coming. In fact, 3 out of 5 mortgages in Canada don't make it to the end of the term, which means they're almost certainly going to have a penalty. And if you are stuck in a fixed rate mortgage and you have a high payout penalty, it can be financially devastating. In fact, I've seen more people suffer from high penalties than I've seen from having to suffer from a 4% interest rate increase in a 12-month period. Now, the fourth reason why you shouldn't be choosing a fixed rate mortgage is if you might move in the next 5 years. Because if you are planning on moving and you find yourself with those big penalties, it can actually put some handcuffs on you with respect to your ability to move. So let's say you're moving to a different province or you want to move to a bigger house and you've got this massive penalty. Well, you could be stuck with the lender that you have because you chose a fixed rate mortgage. And if that lender isn't willing to lend on the new property or maybe doesn't have advantageous qualifying if you are porting your mortgage, well, then you could find yourself pretty much stuck. And one thing that people don't consider, especially when banks tell them, don't worry about the penalty, your mortgage is portable. Well, when you go to port your mortgage, you typically have to keep the same amortization, which means that if you are getting a bigger mortgage on a bigger house, even though you may be avoiding the penalty, you may have significantly higher penalties or may not qualify because that 5-year fixed mortgage had a giant penalty which caused you to not be able to move to a different property. By the way, one of the big trends that we're seeing at the end of 2022 is people who want to move. They thought they could port their mortgage. They sell their house, and all of a sudden they find out after they've sold their house that they can't qualify to port their mortgage, and they end up having to get a brand new mortgage and on top of that, pay a penalty. And the fifth reason why you shouldn't choose a fixed rate mortgage in 2023 is if you might want to refinance in the next few years. So let's say you have a cosigner and you want to remove them from your mortgage. Having a 5-year fixed mortgage may make that problematic. Let's say you want to refinance and do a basement development, or you want to refinance and build a garage. Those things may not be possible because of the higher penalties associated with 5-year fixed mortgages. And I'm not saying that these things are totally impossible, but having that 5-year fixed mortgage may prevent you from being able to refinance and do the things you want to do. That could also be problematic if you have a ton of equity and let's say you decide that you want to pay out some debt because things got expensive due to inflation. And all of a sudden you realize that you've got that penalty which prevents you from being able to pay out the mortgage. So I think you're probably sensing that there's a theme here. And the theme is if you have a 5-year fixed mortgage, you are exposing yourself to penalties. And if you expose yourself to penalties, that puts some handcuffs on what you're able to do. In fact, we think the risk of having a penalty far exceeds the risk of having higher interest rates in the future. Now, that's just our opinion. You have to do your own due diligence in order to determine if a fixed or a variable rate mortgage is right for you. But these are just some of the reasons why it doesn't make sense to have a fixed rate mortgage. Now, I'll link to the video right here on why you shouldn't have a variable rate mortgage in 2023. And watch out for that next video, which is fixed rates versus variable rate mortgages in 2023, where we'll compare the two.